All right, guys, let's get right into the trade recap from today. Beautiful start to the week, made about $650 across 3 accounts. Let's get this trade sinker P&L out of the way here. All right, so on the higher time frame, these are the levels that I had marked out. As you can see, it's a little bit of a mess. Like this 1 hour is sort of in a range and it's not really clearly showing any sort of trend towards an obvious draw in liquidity. Based off of this current 1 hour candle, I was expecting this sell side level to get hit and this London low. So I would have been open to potentially taking a short towards these at market open if we got some sort of pullback and displacement towards those draws on liquidity. But I was looking on the 1 minute time frame. And what I noticed was at 7:31, we have this data wick. And the easiest way to identify this is like, if you look at this wick, it's just so obvious and it stands out. The way you know whether or not it's a data wick or not is you can open up Financial Juice and then you can scroll down to the exact minute that that candle was made. So in this case, it was 7:31, like we said. And you can see right here, 7:31, there was news with Trump. So Iran requested a meeting. Whatever, it doesn't matter what the news is, but if it puts in a candle like that, that's when I classify that as a data wick. So it doesn't have to happen at 8:30 because a lot of people just take a look at Forex Factory, which doesn't tell you like minute by minute news. And that's why it's always good to have Financial Juice as well, so you can look at exactly what's causing weird candles like this to stick out. So with that being said, I wasn't as open to taking shorts because we had this data high above, and I was expecting that to get run potentially after we sweep this sell side liquidity. Now, because the higher time frame is not super obvious, I still have the liquidity marked out that I want to get hit, and that's data highs. So now what am I waiting for? I'm waiting for clear displacement towards that obvious draw in liquidity. Obviously, if we get displacement down here, that's not what I want to see. I want to wait for some sort of pullback before hitting this draw in liquidity like this, just because I want confirmation that we're actually heading in that direction, right? So what happened at market open was we sold off, we swept both these lows. So that was this 1 hour sell side and London low here. So now I'm not really expecting price to continue any lower, especially when you get displacement like this off of those lows. It's pretty obvious that now we're looking to head towards this data high now that we marked out before. We ended up edging this data high here, so we did not sweep it. Now it was swept on NQ as well as ES, but the reason why I was okay with still targeting this was because we had these buy side draws on liquidity up here on the higher time frame that weren't swept. It wouldn't have really made sense to target any lower because you don't want to be targeting a low that already swept these lows. If the market started displacing towards here like crazy and then we got some sort of flip, then you can look for continuation. But until then, I'm expecting price to continue higher. After price came up and created these equal highs here, we got a very good retracement. And then this is where we put in that strong displacement candle. Now, what ended up happening here was if I switch to the 1 second, we started to get really strong displacement. Now, typically I'll enter mid candle if I see really obvious displacement just to get a little bit better RR. And that's what I ended up doing. But I entered somewhere around here and then price wicked down and ended up filling me right here. So that's why it looked so low. And then price ended up continuing to push higher on this 1 minute candle. So it ended up closing way up here, which ended up working out perfectly. But typically my entry would be up here once the candle closes and then I target 1-to-1. Even if that means extending the take profit a little bit past this data high to get 1-to-1, that's okay. But because we got a really good fill here, it ended up working perfectly. Now, you might ask yourself, we don't have any delivery out of a fair value gap, and we're also kind of in this range right here, right? So this was a little bit more of a discretionary trade because it wasn't as obvious of a continuation trade. But this trade was purely based off of having a very strong draw on liquidity, as well as having very obvious displacement with this 1 minute candle here. When I see a good retrace like this and then obvious displacement, then I want to be targeting the liquidity in that direction. And the reason why I was expecting it to continue higher was because, again, we already swept these sell side draws and we left equal highs as well as these higher time frame draws on liquidity buy side, and it ended up smacking TP in just a couple candles here. Now, I wouldn't rate this an A+ setup because, again, we didn't deliver out of some sort of fair value gap. My A+ setup will always be very obvious displacement towards some sort of draw on liquidity, and then a pullback or retrace into some sort of fair value gap, and then displacement out of there towards the draw on liquidity. That's an A+ setup. Now, this was a little bit more discretionary, but it's the same idea. We just didn't have delivery out of a fair value gap. So if you didn't take this trade, that's completely fine. It's something that takes time to build up the discretion to be able to take trades like this and confidence in the draw and liquidity. But what you can take from this is that liquidity is always the most important. We're trading based off of where the market needs to move and not the entry model itself. Now, you need the entry model to be able to understand when to enter, but make sure you're basing all of your trades off of what you're actually targeting rather than the other way around, and you'll see way higher win rates in your trading. So basically, to summarize this, the idea behind this trade is that when price came up like this and did not sweep this data high and came down, we left this level open to be taken still. Market has not achieved its objective before continuing lower. If we wanted to continue lower, that's fine, but we want to see the market take the buy side draw on liquidity before continuing lower. And that's exactly what it did. We came up and then ended up selling off once we took that buy side draw on liquidity, and then took this sell side low right after that. Once the market achieves its objective of taking this data high, now the liquidity has been swept, now price might continue lower, and that's what happened. But until this level gets swept, you want to be looking for longs towards this data high. So that's going to be everything for me today. I'm going to be posting an updated version of my Notion trading journal because I had a couple people say that they're not able to access some of the other charts because they have the free version of Notion. I'm going to be redesigning it a little bit so it displays all the statistics on a dashboard that is completely optimized for the free version of Notion. Look out for that. It'll be posted in my free Discord. The link's in the description below. So if you guys want that, take a look, join the free Discord, and I'll be posting that soon. So with that being said, you guys enjoy the rest of your day, and we'll see you in the next one.